Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for September 11th, 2022. First and foremost, I'd like to acknowledge a couple of things. It is the anniversary of September 11th, unfortunately, and it's always a tough time for myself and many other people that have been in, and many Americans and many people throughout the world. It's a day for remembrance for all of us. So I'd like to acknowledge that to all of you that were personally affected by the events of September 11th, especially. Also, to those of you in the United Kingdom, our deepest condolences to your queen, to you, with the passing of your queen. She was an amazing figurehead, and I know it was constant in a sometimes very, very crazy world throughout my lifetime and most people's lifetimes. So just want to acknowledge the two of those things. Now let's get into the markets, and let's get into what we've got to look forward to this week in the markets. And let me not mince words here. It's all about inflation this week. It's all about inflation. That's it. CPI data out of the U.S. comes out, what, Tuesday? Is it Tuesday or Wednesday? Let me double check that. It is actually Wednesday morning. I just had to confirm that really quick. Wednesday in the U.S. we'll have inflation data, and it is going to be a market mover, any which way you slice it. I'm sorry, did I just say Wednesday? Let me rephrase that. The data is actually coming out on Tuesday. I don't know. I was looking at PPI. CPI is going to be on Tuesday, and so Tuesday at 8:30 a.m. Eastern, that data is likely going to set the pace for the remainder of the week in the markets. So just want you to keep that in mind. Now, I'm going to talk about other events that are happening this week too, but really inflation is all that matters. We do have producer prices the next day, but that's, I think that's going to be secondary to what, the CPI is going to show us. Now, there's a lot of setups, but what I'm going to do today is I'm going to spend a lot of time actually breaking down the charts, removing some of the drawings that we have on these charts that might be a little stale, and applying some new, not indicators, but just, new looks to what we're seeing. But before I do that, let me just say that if you like these week ahead videos, make sure you give us a thumbs up. It's not just for myself. It's for the Forex Analytics team that helps put this out every single week. And I might be the person that does the analysis and is being filmed, but there are people behind the scenes that are actually diligently working throughout the weekend to make this happen. So if you like these videos, subscribe to the channel. It's free to subscribe to the channel, and also give us a thumbs up. Comment down below too. If I say something that you question, or you want some clarification, get down in the comments below and let's chat about it. I'll go back and review the comments just to see where we're all at. Also, I also need to mention that what's almost free is trying out Forex Analytics. It's only $1 for 10 days. I'm going to tell you this right now. Our prices are going up at the end of this month, and they're going to go up substantially. We have not raised our prices in 3 or 4 years, but prices are going to go up substantially. So if you want to lock in like current prices, and we will have a special here in the next couple of weeks to take advantage of the current price and specials, then you might want to try it out right now, because like I said, our prices will go up substantially, and we have to. So let's talk about, and just so you all know, if you're currently a Forex Analytics subscriber, you'll be grandfathered in at the current prices. That we always do that for our people to reward loyalty, and we've had people that have been with us since the beginning that continue to stay with us. All right, now let's get into the charts. Let's go talk about a few different things that's happening. So obviously I'm going to be going through the charts right now, but when you get Forex Analytics, make sure you download the mobile app. You can get to our chat room. And you know, you have obviously all the updates and all the analysis on at your fingertips here, and you know, so you can go through it. But this is being updated through the weekend, so not by me, by the rest of the team. So I'm gonna actually go through, you know, the charts what I'm seeing. So let's go to the euro. Let's start with the euro, and you can see it's actually everything here is a couple of weeks old. I haven't even touched these charts. Because I wasn't here last weekend. I happened to be in California for a sporting event for my son. Gregor Horvat was kind enough to do last week's week ahead. So give him a big thanks next time you see him or hear from him or tweet at him. Just say, hey, thanks for providing that. So first and foremost, the euro, as we know, is capped by 2022's descending trend line. Period. End of story. While we're below that, we're in a bearish trend. We all know that, right? But remember, it's CPI data that's coming out. And by the way, I posted in the Forex Analytics chat room really good information on inflation data that might suggest that it's peaked. And let's just say it is, all right? And for argument's sake, let's say inflation really starts to come down. If inflation starts to come down, what that's going to do is A, it's going to weaken the dollar, but B, it's going to improve risk sentiment because traders are going to believe that the Fed is getting close or is at a terminal rate, and whether the Fed keeps rates at current levels or they decide to drop them, you know, to maybe spark some growth in a decelerating economy. Regardless, what the market wants to know is where is that top that the Fed, their terminal rate, where does the Fed stop raising rates? So if inflation comes down and inflation expectations start to come down, that means the Fed is more than likely going to stop raising rates, at least so aggressively, and they might just stop as a whole. What that's going to do is that's going to weaken the dollar. That's also going to strengthen stocks. So what we're looking at this week is we've got the euro that's, you know, I know it's the euro, and I know we just got past the ECB. That's a good thing. But, you know, hey, let's you know, again, I'm not here to really mince words. You know, let's just talk about if we break out. You know, how about if we break out on weak data? If the data does indeed weaken, I think the dollar stands to actually correct quite a bit. And we're going to talk about why, or in what other, you know, pairs that's likely to happen. But as you can see, we're stalling at a 50% retracement of the last drop. So really, it's all right about here. Really, it's about this 50% retracement to the 618 retracement. See where I just drew this green? Here, I drew a green X. If you guys want to play tic-tac-toe with me anytime, you know, we can do that. You know, there's an X, and then there's a 0, and then I'm joking, we won't do that. But what I am saying is this area right here is going to be very critical for the market to break. And if the market breaks it, you know, 101.80, forget about it. That's where the market turns really bullish euros, bearish dollars. Think about that, and maybe that's a number you might want to write down in your little sketchbook that you're using right now with a pen and paper, right? Right? Okay. Let's continue on. So if you look at this Sterling's had a nice rebound off of this channel support. Now, most of you know I'm long Sterling. At least most of you that are in the Forex Analytics community, if you've been following me on or following us on the Face shows, you know I'm long Sterling. I was looking at this channel a long time ago. You can see weeks back, so I'm just going to go ahead and extend what I had drawn out before. But notice we hit the 161% extension, and we're bouncing. Now, what you'll also notice here is, holy cow, that is a, you know, semi-quasi whole head and shoulder pattern, right? So you can argue that is a head and shoulder pattern. That's probably the neckline right there. And, you know, if that's the case, then we could rally, and I'm just very roughly drawing it here, just so don't go, well, what kind of line is that? I'm just freehanding it, guys. Just deal with it. So there's a you know, previous support. That's probably going to act as current resistance. Think about an overshoot. That's probably what, about a 38% retracement on a bounce. So I would say that's probably where we're going. You know, 117.5 ish, maybe a little bit more, maybe a little bit less. Again, what I can do is I can do this. Low to high. There we go. Matter of fact, we can actually just take the last drop because it's good to the last drop. Get it? That was funny. Some of you might have found that funny. Anyway, you can see 117.50 is resistance. Then, it's the 38% retracement. Also the bottom of that, resistance zone, if you will. And we could overshoot maybe up to 118 and change. That's entirely possible. Again, if this is an inverted head and shoulder pattern, it's playing itself out. I think that this is all doable in the coming week, especially if we have weak CPI data. Now, you know what else is coming out this week? What else is coming out this week is on Wednesday night. Here, if you live in the United States or in Europe, they'll be late. But Thursday morning in Australia, we're going to have employment. Now, the Aussie, as you guys know, I've been, bullish the Aussie most of this year. Over the last couple of weeks, I've soured on it a little bit because, stocks were higher. The Aussie wasn't really moving higher. I figured if stocks are going to come down, the Aussie is going to come down. It did. And that happened over the last couple of weeks. You can go back and listen to some of the week ahead videos where I talked about, I'm bullish Aussie. And then if you listen to the face shows, I'm like, I lost a little bit of money being on the long side right around here. And I'm like, yeah, I'm a little nervous now because stocks are starting to come down. So the Aussie did correct. Now, what the Aussie has done, and let me just go ahead and delete all this stuff right now. So what the Aussie has done is it's created a higher low. Now that is really important if you're a trend follower, or hell, even if you're a trend fader. That's important to know that we just didn't create a lower low. Because of that, that is where you start to get in process of a trend change. So when you got lower highs that you can see there, then you got higher lows, that argues that we could actually be in a flat or a consolidation, right? So that means we would do something like this. Let me get something like, we'd get something like this, right? Or, we start to do something like this. You start to see higher highs and higher lows. And then we get a shift in trend from this big long-term channel. And you guys know I've been following this long-term channel. It looks like that for a long time, right? So the point I'm trying to make is as long as that low holds, you can trade against it. Meaning that if it dips and you want to buy it, you know where your risk is. As a trader, that's like the one thing you can control, right? There's not a lot you can control as a trader. You can't control news. You can't control, random tweets that come from world leaders. You can't control, black swan events. What you can control is your risk when you trade. To an extent, obviously you can have gaps in the market. Yes, I get that. But 99% of what you can control is in your stop, what you're risking. So if when you're trading the Aussie dollar long and you go, okay, below here I'm wrong, that would be below these lows, below here I know I'm wrong, then I can gauge how big of a position you take and how much risk you're taking at any given time. And that as a trader is really what we look for, is the best risk, least amount of risk, and what's the reward potential. So when I start looking at things like this, I go, okay, well then that means I'm risking here and to make possibly here, maybe even here. So if I'm entering here, that means I've got a really good risk reward ratio. You want to do the math on that, you go like this. Oh, well, I want to go in at 68.50, right? Or say roughly at 68.50. That's about where we're at, and say, well, I'm risking to 66.20, but I'm looking to make, I'm looking to make maybe to 72. So my risk, is that correct? 66.20 entry. Oh, I typed it in correct. Sorry, I did it the wrong way. 66. There we go. 66. 20. My risk reward is 1.5 to 1. That's good. It's better than it's a good risk reward ratio, right? So anyway, you guys can get what I'm saying here. You want to have your risk always out, or your reward always outpacing your risk. Then you can say, well, if I'm gonna invest, let's say, 100,000, or I'm going to buy one full lot, I'm risking 3,300 to make 5,100. Obviously what would probably be better is if this dipped down to here. Like I said, you're buying dips and it dips down to 67.70, and you go, well, I'm going to buy it here at 67.70. That's a much better risk reward at risking 2,200 to make 6,300. Now your risk reward is almost 3 to 1. Anyway, so with the Aussie, just realize that I think that you can buy dips now in the Aussie, but we do have employment data that is going to be, what did I say, Wednesday night, Thursday morning. So just keep that in mind. Now let's go ahead and take a look at a few other things. But before I do so, let me give you a message from our sponsor of today's show. That's going to be the Trader Funding Program. So if you haven't had a chance to figure out or take a look at the Trader Funding Program, just go to the Forex Analytics website, click on Trader Funding Program, watch this little 2-minute video. Because if you want to learn how to trade our money and not risk your own money, trade our capital, not take any risk, and keep 75% of the returns, then watch that 2-minute video. We had a meeting this week with our partners, technology, broker partners, and we were talking about how many funded traders we have, because it's capital requirements and things like that we have to discuss. So I wasn't aware how many funded traders that we were acquiring and what that number was. It kind of jumped out at me this week that it was a little larger than I thought. And so that's a good thing. That means that there's more traders that are getting funded for live accounts, because, it's like, if you have the money, maybe you don't want to risk it, or maybe you just don't even have the access to, to being able to have a $500,000 account. You just don't have that kind of capital put down. Well, use ours. You just have to take an assessment. If you pass the assessment, that means you'll also get the support of Forex Analytics along the way for a certain period of time. That means you get Forex Analytics Premium for free, so you can jump in our chat rooms and you can be in our community, listen to all of our live trainings. Then if you haven't checked that out, you should. You should. Watch a 2-minute video. That will not hurt you. All right, let's get back to the markets, and I want to talk a little bit more about. I want to talk about a few other things that I think are important. Let's first of all, let's talk about the S&P. So again, this is a chart that you guys and gals have seen a lot without let me go ahead and remove this really quick. I want to show you where we hit. So if you take this fib and you go all the way to the low, the very low, then what you're going to notice is the 618 retracement held. I'm pretty sure if you go back a couple weeks ago when I drew this one, I wasn't sure if we were here or here, but obviously it is here, because you can see the 618 clearly held, and we bounced like a bat out of hell. Now, the question that you're asking is, well, how far can we go? My answer is wait till Tuesday, because if the inflation data does weaken, and it weakens substantially, people are going to feel that the Fed really can have the flexibility of, and this is done, just so you guys know, they have the capability of really, slowing down, if not stopping, the rate hike cycle. So if that's the case, maybe that's the catalyst that drives us. Here's the daily chart. That's the catalyst that drives us back to the 200-day moving average. Now, I get a little skeptical, and I'm going to get a little nervous in the event that we get back to the 200-day moving average, but I think this is all doable at this point, especially, like I said, based on some of the things that we're seeing, inflation has a good chance of actually coming in lower than expectations. If that's the case, stocks could continue higher. Now, it's not just the S&P. You could look at other markets too, whether you're looking at the NASDAQ or the Dow. And if you want, better views of those markets, come to the free face show where you listen to not only myself, but the rest of the team, and then ask the question there. Hey, Blake, let's take a look at, of what's happening in the DAX, and I'll take a look at the DAX, or maybe the CAC 40. I'll pull up that chart too. But right now we're just going to limit to the S&P 500, because there's other things I want to talk about. So you got the S&P that looks bullish, right? Or, it's breaking this descending trend line. We got inflation data, could take us back towards the 200-day moving average this week. But if we get back to like 4250, that channel resistance, I will be a little nervous as far as being long, quote unquote, risk. All right. One other thing I want to point out. Well, actually, there's two other things, so bear with me. Ethereum. Bitcoin, as far as I'm concerned, Bitcoin's dead. While it's below 25,000, not even worth looking at it. But you have Ethereum that's looking a little bit better. The pullbacks have been less major than what we've seen in Bitcoin. So the reason why this is important is because now I'm not a Ethereum expert, but I know a merge is happening, and the merge is like proof of work, proof of no, I want to say proof of concept, but that ain't it. But anyway, it's gonna bring down energy costs dramatically, and to mine Ethereum, and so a lot of attention's been on Ethereum for this merge that's happening over the next week. Now I've heard it could take 3 weeks, but anyway, that's for you to figure out. But what I am going to tell you is if Ethereum, if risk rallies, let me just say that if risk rallies, I think Ethereum has the risk of actually moving back towards the you can see the 200-day moving average right there, but also around the $2,000 level, and that's going to happen with risk appetite. And let me just say that if you're in the trader funding program, not only do you get to trade currencies, you get to trade equities, you get to trade some single stock CFDs, but also you get to trade a basket of like 400 different coins and altcoins in the crypto market. So you want to take advantage of Ethereum and you live in the United States and you want to trade both directions, check out the trader funding program. That's what you should be doing. But anyway, going back to Ethereum, I think that is a risk of continuing pushing higher, especially if stocks move higher. One of the last things I do want to talk about is I do want to reference and acknowledge the fact that gold continues to hold that 1680 support. I thought it might break through that 1680. Once again, it is holding. Now, the question will be, can gold stage another massive rally? The thing is I look at gold, and if it continues to hold 1680, why can't we get back to the 200-day moving average? Why can't we get back to maybe even the 1950, 1900, 1920 range? Why not? If we're not going to go down, we only have one other direction to go. Well, we could go sideways, but it's usually up, So if we continue to hold this support and we don't create new lows, which I thought was the risk because the dollar was so strong, but gold's actually been holding up. So now if we get above this trend line that comes in right around the 50-day moving average, you can see that right at 1750. Again, sketchbook, maybe you're writing that down. If gold gets above 1750, that's going to be a pretty bullish event, especially on like a daily close above 1750. All right, guys and gals. Hey, listen, if you like my analysis, again, give me a thumbs up, give the team a thumbs up. Comment down below and anything that you see, but also join us on our free shows. We have the Flow Show, which is a European analysis show that preps you for the trading day. And then we have the Face Show, which preps you for the North American session. They are free. Attend them. You can get my views, but the rest of the team, which is more important than my views, is the rest of the team's views. All right. So check us out. I want to say once again, in remembrance of September 11th, and very sad day, the saddest day in U.S. history. Once again, for those of you that were personally affected, my sincerest and deepest, thoughts and prayers are always with you and America for that. And those of you in the UK, once again, the Queen will be missed. Not only by myself, not only by the majority of Americans, but the majority of humans worldwide. So have a great weekend, or excuse me, great remainder of your weekend. Have a great week. I'll see you guys on the Face Show on Monday. Goodbye. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.